What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. This has been a great week in markets. Two major news dropped at the macro level. The first one is, of course, the debt ceiling bill being signed and preventing the US government from defaulting on its debt obligations starting as early as tomorrow, Monday. With this bill now being fully signed, we essentially get to kick the bucket down the road until January of 2025 for the next president to worry about. We're not going to get into that. But the second big news, is the May job report that dropped on Friday, beating expectations. And I can already hear it. But Tevi, if the economy is strong and the labor market remains resilient, doesn't that mean that the Fed will keep raising rates? That would be true. However, the reason why the stock market rejoiced is because despite the strong job report, the unemployment rate itself actually increased to its highest level since October of 2022. It is now sitting at 3.7%, essentially reinforcing the case for a Fed pause here come June 14th. Between the boost at the macro level and ChargePoint posting some solid results during the earning call earlier this week, we saw a proper 9.01% weekly gain on ChargePoint. So in today's video, I'll go over the key highlights from the earning call. We now have a more specific date for the company turning profitable. That's exciting. We'll also check on overall analyst sentiment. We have several upgrades post-call, and I'll close with what I'm personally doing as far as buying, selling, or holding. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and a thought process behind it. I'd recommend watching all the way through, as always, so you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. You know, it's going to be a great earnings report when the CEO kicks off by announcing that this was the second largest revenue growth quarter in the history of the company. For some quick stats, revenue came in at the top of the communicated guidance range for Q1 to the tune of $130 million. This represents a 59% year-over-year increase. Gross margin increased further to now 25%. You can see the continuous improvement trend here. That is absolutely key to reaching profitability. More on that later. Net loss decreased by $10 million from 89.3 the previous quarter to now 79.4 million. This ultimately translates to a better than expected earning per share, or EPS, with a loss of 15 cents versus the expected 17 cents. They closed Q1 with $313.7 million on the balance left. It is worth noting that 17.7 million of that came from issuing more stocks, which now explains part of the reason why the stock price did drop earlier in the quarter. So overall, great results, as I said. On a go-forward basis, ChargePoint expects to achieve revenue in the range of $148 to $158 million this next quarter, essentially projecting an over 40% revenue improvement on a year-over-year basis, but also maintaining the growth story with a quarter-over-quarter increase. The guidance was criticized by some as being disappointing, which is kind of funny, due to the fact that the street consensus was for ChargePoint to provide a more aggressive projected guidance at $166 million in Q2. The way I see it, a company that is able to deliver a consistent 40+% revenue growth year over year with each passing quarter is absolutely doing something right. But what's even more important is that I'm not the only one who sees it that way. Prior to the earning call, we had a consensus rating of a moderate buy with 9 total ratings. As a reminder, that was 5 buy ratings and 4 hold ratings. Post-earning call, the overall consensus has been upgraded to a strong buy with 13 total ratings. We now have a breakdown of 10 buy ratings, 3 hold ratings, and still 0 sell ratings. This is a very positive shift in sentiment around the stock, and it's worth noting. That said, the high end of the range did drop slightly to $27 from $28 previously. The low end remains unchanged at $10. The average consensus price target, however, did increase slightly to now $15.92. This implies a potential gain of 75.52% from current levels. The thing is, EV adoption isn't slowing, it's actually speeding up. This then brings me to how I'm thinking about the stock. ChargePoint after this week has pushed past its 50-day moving average once again. For reference, the 50-day is currently at $8.97. With the solid earning results and a good macro environment heading into the Fed pause in a couple of weeks here, this should keep the momentum going, or at the very least help turn the 50-day moving average back into support. In my last video, I told you that when it comes to ChargePoint, I'm focused on the long-term vision. I can't stress that enough. There are a few key things taking place next year. First, rate cuts should go into effect if the Fed stays on plan and inflation keeps trending lower. Second, the economy is still strong, but it is slowing, and that's important. The relevance here is that the Fed may need to also inject liquidity into the system come next year in addition to the rate cuts. That's good. Last but certainly not least, and this is the golden nugget dropped during the earning call. Rex Jackson, ChargePoint Chief Financial Officer, during the call said that they are on pace to turn profitable in Q4 of 2024. That's next year. That's right around the corner, and it will get here sooner than you think. EV adoption only accelerates from here, right? I keep saying this. There's a reason why Ford tapped not just ChargePoint, but now also Tesla for their charging needs. We know that NIO and other Chinese EV makers are already in the European market and planning to enter the US market in 2025. 2025 is also the year that most OEMs will be launching either their new generation of EVs and or expanding their lineup to meet the growing demand that's out there from consumers. The charging infrastructure has to grow accordingly. So once again, ChargePoint, being the largest provider of charging solutions, is extremely well positioned to benefit from it all. And so really when you think about it, the stock is still down 4.53% year to date and about 80% from its all-time high achieved during the last bull run. So now really is the time to accumulate, and that's exactly what I intend to continue to do. And that's just me. The question is, what will you do now that you have this information? But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.